Morning, Steve Freed in Chicago with the morning grain comments. Well, we've got some light snow here in Chicago. The rains that were in the Midwest the last couple of days have moved into the eastern part of the country. The outlook for the next 2 weeks calls for normal to above temps across most of the Midwest, and we could see normal rains in parts of the West Midwest and the Southeast. As far as the overnight news is concerned, beans are near the 5-week highs. Corn is still in this trading range, and wheat is near contract lows. The dollar's a little bit higher, and most commodities are mixed to a little bit lower. Globally, we're seeing European stock markets near 3-month highs as they wait talk of a stimulus package. Also in China, stocks rallied pretty sharply overnight on talk the government could announce a new plan that would help subsidize new home buying. Here in the United States, we're waiting for the Fed meeting to see if they increase rates here in December, but U.S. manufacturing was the lowest level since 2009. There was some increase in farmer selling of corn overnight, especially in the eastern Midwest. China was a small buyer of U.S. soybeans for January, and we're continuing to watch the deliveries in the wheat. A little bit of commercial stopping, but that's offered resistance to wheat prices. A drier 2-week forecast in northern Brazil may be helping the soybean and soybean meal market. It could reduce corn plantings of the second crop in Brazil, but we know with this new export policy, the Argentina farmer is trying to increase his second crop corn plantings. Soy oil is supported by talk that there may be legislation in Congress that would produce a producer blend credit that would limit imports of vegetable oil and increase demand for soybean oil for biofuels. We have a private estimate tomorrow that comes out with world crop production. And on Friday, Stats Canada will revise their numbers for their 2015 crops, and most people think they'll revise the numbers up. As far as the funds are concerned, there is some talk that some of the funds might be trying to limit some of their positions and exposures in some of these markets, especially markets that they may be losing money in before the end of the year. I think the bears are waiting for them to exit some of their short grain positions before they come in and start selling the market again. Funds are estimated to be short about 50,000 beans, almost 100,000 corn, and 50,000 wheat. And yesterday, the open interest was up in corn, meal, and wheat, and down in soybeans and soybean oil. So again, we're kind of dancing around some highs in the beans, some lows in the wheat, with wheat stuck in the middle. As always, these are my thoughts and not those of ADM or ADM Investor Services. Have a safe and profitable trading day.